Sellers made a stand defending the point of control of the key all-time high supply pretty much right to the tick, right before the next FOMC meeting next week. Additionally, bombs are coming down again in Iran and Israel. So, will the escalating conflict spook the markets, or will buyers continue to climb this wall of worry? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and a swing report. In this video, we'll cover all that and more, so let's get into it here. All right, so starting off with SPY, like I was saying in the intro here, the sellers pretty much defended, it's pretty much the last line in the sand besides the all-time high. So this is essentially the all-time high supply. This is the only inventory that's in the way for these buyers to absorb in order for them to be positioned for new highs. If they can find acceptance over 604.83, that would affirm this prior supply as demand, and doing so then would keep them positioned very well for a go at new record highs. And I'm thinking if we do happen to break to new record highs, probably looking at like the R1 for the year, which is up at 640. I would imagine that these buyers are looking to press up to there if they can break the new highs. Right? There are very few years where you find acceptance over the pivot and then don't make it to the R1. So you get all the way to R3 last year. For in 2023, there was like some oscillation around the pivot. Eventually, you do make it to the R1. 2022 was, of course, that down year. In 2021, you're over the pivot for the whole year and just missed the R2, blow past the R1 after a back test. You get it. Most years, if you're over the pivot, really very often, you do get to that R1 level. So that's what I'm looking out for if these buyers do make new highs. Now, that being said, I wouldn't be surprised if we're in for a little bit more consolidation just because, well, we've come pretty much straight off of the lows, and you can see how much consolidation occurred on the last range expansion. We balanced for roughly three weeks or so, May 25th to around June. Wait, that doesn't seem right. May 12th, excuse me, to around June 3rd. So I wouldn't be surprised if these buyers struggle a little bit here, especially because the sellers have already shown us that they are present here, playing off of the all-time high supply. So what do we care about next week? First, I guess we should talk a little bit about FOMC. FOMC's next week. The rate cut, it's very, very unlikely. You can go to the Fed Watch tool if you like, but it's very unlikely that we see a cut until I think it's a September meeting where there's like any kind of significant chance of seeing another cut. So we don't really care so much about that. What we care primarily about is what's said afterwards during the presser, what Jay Powell says, what his sentiments are, or whatnot. Because the Fed's been pretty transparent. They've been telegraphing what they're going to do if XYZ. So that's really what the market cares about. Now, regarding the fundamental news with like more conflict in the Middle East, the market shouldn't care too much about that, in my opinion. Like, the conflict is not a new one. It's been kind of building to this point for really since that October 7th attack. Was that 2 years ago? Firstly, the conflict between Iran and Israel has been one, like, in this permutation for like 3 decades, right? And in the, kind of larger context, a few millennia or so. It's not really terribly unexpected. Additionally, the conflict, as I understand it right now, is pretty unilateral, right? Iran's response was very much to minimal effect. The IDF is saying that they have air superiority, if not air supremacy, over Iran right now. So I think the odds of it escalating are pretty limited, escalating to the point where, it kind of spill over into, say, US or UK or French forces being dragged into it. I really, really doubt that. To me, it seems like the bulk of this attack, let's call it, is likely over. And even if it wasn't to be the case, what we care primarily about is really no different than any of the news that's been coming out since here: trade wars, trade talks, trade talks failing, tariffs, whatever. Um, there's something else. Oh yeah, the feud right between Musk and Trump. None of those things really mattered in the long term, and how we assessed whether or not they were actually being impactful ever since we came off the low was just a matter of, are we negating daily breakout points? So as of right now, it's really the same as we were looking at last week, because it's pretty much been a flat week, more or less. And what we care about continues to be this area here. 593.20 is the daily no change level. It's roughly the same as this point of control of this prior supply now acting as demand. This is essentially the gateway structure into all of this much larger demand. So if we can't come into here, then obviously we just continue to trade sideways or higher here. If we trade sideways or higher over prior demand, then obviously that's no problem for these buyers. So the key daily references for next week again remain exactly the same, and you'll notice that while the sellers did exactly what they had to do, right, defending against the point of control of that all-time high supply, there was a very clear battle for the value area low over here. If we zoom in, you can see you make this low initially right off of the value area low, rally, and then cannot get over the into the balance from yesterday, or from the prior session, I should say, and then roll back over, and then it's a battle for the value area low again. And the sellers drove beyond the value area low, but missed touching down on the value area high of this prior supply, right? So now acting as demand. So that was a very notable failure. There has been more news of conflict over the weekend, so there is the potential that there's still some concern, but again, what we care primarily about is acceptance under the level. Even if the level breaks, as it did over here, if the sellers can't find acceptance under it, then it's right back to business for the buyers. So I would be surprised, honestly, if these buyers didn't come and test the all-time high, but we shall see. Because a lot of the stuff is kind of behind us, right? Like the all those let's call them exorbitant tariffs look like they're kind of on the put on the shelf for now. Trade negotiations with China seems to be more or less finalized at that like 50% rate. So yeah, market continues to climb this wall of worry as far as I'm concerned. So that's pretty much it. Moving on then to the Qs here. So for the Qs, it's a pretty similar situation where there's very little change from last week. I think the Qs were even more flat, just a 0.5% down. But we're watching the same thing. So the high of last week for the Qs was not off the point of control of the all-time high supply. It was right off of its value area low. And it's notable, right? Because again, these sellers are playing defense at their kind of the last little bit of inventory before these buyers can move to new highs. So and there's some relative weakness in the sense that the sellers were able to get all the way back to the daily breakout point, 526.48. But that being said, this little local area of demand is still being affirmed as demand as long as these buyers can hold over 520.87. So next week, that's really what we care about, this level over here. You can see we flattened out at the daily no change level. I think the initial low of the morning was right off of it, right? So again, the market kind of tells you, right, kind of shows you what it cares about, right, which structures it cares about. And as of right now, this local area of daily demand, certainly the market cares about. It's affirmed it already many times. Even if we look back into over here, there was a clear double bottom drop in pops at the daily no change level, another bottom pretty much set right off of it, another drop and pop here. You try to set a lower high off of it, sellers try to set a lower high off of it and fail, and then of course we rallied off of it since then. So that's really it for the Qs. It's all about 526.48 and then 520.87 next week. Moving on to IWM here. So for IWM, a lot of relative weakness here, right? So for IWM, they rejected pretty much right off of the high of the March 3rd candle, which is the candle that really took us out of this range. Now, I know there was a breakdown before that, but the prior breakdown, didn't have follow through. It was really this session that has really big range expansion, tons of volume on it, and then we trade sideways to consolidate that move. So the fact that these buyers had problems right at the high of that session, essentially, think about it, right? The market is always trying to affirm or negate what's already happened. So essentially, the buyers were trying to negate this action, and they failed, right? Because they made it all the way to the cusp of trying to negate that, or of attempting to negate that, and then they rolled over. So as of right now, this breakdown is still kind of being affirmed here. But at the same time, we have a lot of demand to be looking at as a reference as well. So this is, we're looking back at this guy, 3442. I haven't updated it to this local area yet because this guy was just offering really good references. They're probably going to tell you a very similar story anyway. I wouldn't be surprised, at least, if they're telling you a very similar story. Actually quite different. So maybe we should update this. Actually, I probably should have done that earlier, but we'll just go ahead and update this right now. And I would say that this local demand we should care about more than the older reference, because we've already technically traded through the older reference, and this is really the more relevant structure. So wow, we flattened out pretty much right at this guy's point of control here. I'm curious to see what that looks like on the lower time frames. All right. So at this point, we don't really need these lines right now anymore. Actually, we could leave them up for the example for later because this was my selling target when I was a seller on this day. Okay, so this was a very notable lack of gap fill. They missed the gap fill by just a wee bit here. Notable failure for these buyers, and so it is what gave me confidence to be a seller. Although I didn't end up hitting a sell on Friday. Did I? No, I did. I was scouting it, but I just didn't do it. Got busy. Anyway, so now this is pretty much the key downside reference right now. We're pretty much on it, right? These buyers want to hold over 208.79 to continue to affirm all of this as daily demand. For our key upside reference next week is really just going to be the high of it, 210.13. These buyers, if they're going to hold this point of control, want to get back over this high in order to really have the most confidence in higher prices relative to this local demand being accepted. If we see lower lows next week, it's very clear these sellers should be trying to get back down to the value area low, 205.10, where there's been a lot of market acceptance in the past. And that is really it for the rut. Moving on to the Dow here. So for the Dow, getting caught up in this early March to April structure here is not a great look. But even if we begin to retrace here, so what should these buyers look to do, right? If they're not going to be able to trade through this structure, right, pop and drop over its high, where should the sellers try to get us back to? They should try to get us back to the lows of this guy, right? And it's meaningful not just because it's the low of this early March to early April structure, but it's also exactly where the buyers run into problems, right? Sellers took their stand here, flip this guy into support, and then had some expansion off of it. So if we're going to pop and drop here, the next objectives for these day plus sellers should be here, the value area low 417.14, and then the low of the structure 407.25. I still think this is a pretty reasonable area to be looking for trade. This structure over here is kind of sitting on the highs of this much larger area of demand, and this large area of demand was affirmed over here, technically affirmed over here and here as well, with a drop and pop over it. Obviously not a clean hold, but still a hold of that. And then this balance, right, was essentially, what do they have to do before this leg up? They had to hook back onto it over here to make this higher low after holding the low of the structure. So if you view this as one large area of demand, then the best case scenario would be for these buyers to hold above the gateway structure, the entrance into it. The next best case scenario would be to not allow acceptance through the other side of it. So this is essentially the gate way to the other side, right? This is the gateway entry, this is the gateway exit. They held the exit, and then eventually they needed this higher low off of the entry before they saw this expansion. So if we retrace back into here, essentially is a retest of this guy, seeing if these buyers can hold over this large area of demand. I think this is still a very reasonable place to be looking for trade. Essentially, it would be for a potential, it's not a weekly higher low, but potential monthly higher low, or a weekly lower low that doesn't see follow through. I care much more about structure than I care about price action trends. Like, I think the price action trend is more of like something that monitor in this moment, whereas the structure is really, the more representative of change, right? So they're both valuable. They just kind of tell you different things. All right, so that's pretty much it for the Dow. Moving on to the dollar here. So the dollar made like a new 3-year low. That's quite notable. At this point now, these buyers do not negate the change of this most recent breakdown without acceptance back over 98.295. Very notable. I have a lot of friends overseas who are very happy with this because now they're getting better exchange rates for their currency exchanges, and it hasn't been like that for quite some time. All right, so now that we've seen this breakdown in the dollar, the sellers should be trying to make their way back down to this next structure over here. So I'm thinking the next key reference to the downside is going to be the value area low of that next area of demand. Excuse me, the value area high at 96.505. And that should be the seller objective as long as these buyers can't get back over 98.295. So if you're a seller in the dollar, it would make sense to be playing off of this guy, right? Like if you see this retracement here, something like this, you can use the point of control of this fella, right, which has contained price for many years. Essentially the opposite of this trade, the opposite of this trade. All right, you can look for this sell here, targeting this value area low. Something along these lines I think would be pretty reasonable if you're, forex trader or whatnot. Oops, something like that would be pretty reasonable in my opinion, and I think that would essentially be for the potential of a weekly lower high. And that's really it for the dollar. Moving on to NVDA. So NVDA also having problems at the all-time high supply. this is, again, this is just the all-time high supply. So as of right now, last week we were watching how the value area low of the structure was proving to be problematic for these buyers, as it was here and then again here, and just kind of grinded it for the entirety of the week. And now pulling back a little bit off from it, you can see the high of this session was again pretty much right off of that value area low. If we zoom into detail, I'm sure we'll see like a lot of more lower time frame reactions right off the level, like over here, and even very super clean on Friday, of course. Is this, a red flag? Sure, right? It's a red flag. The buyers are not advancing so well with two higher highs lacking follow through. It's three. Let's see, 145. No, that's a double top. Lacking follow through, but at the same time, there's not really a taper here. The auction doesn't seem to have ended properly here with like a lack of volume on at its highs. So NVDA is also still in a situation where just kind of climbing that wall of worry as long as they're holding over 137.40. And if you're still in from this guy over here, your stop can be under 137.40, maybe under where the volume tapers off at like 131. Because if the price does come back into here, but doesn't really find acceptance under this structure, and then gets back to bouncing up here, they're still positioned really well for a go at new highs. And this was that free trade zone setup that we set up months ago back in March. A lot of folks I know are still in that trade. That's pretty great. We were looking out for a long time. This is actually the second time that we set that trade up. The first one was over here somewhere, I think. Let's see. All right, it's this one. The first time we set it up was back here because we just knew that this was the key structure here, right? And if you're interested in getting these kind of setups sent to you every single week, at least 2 novel ideas sent to you every single week, just like this. Obviously, it won't shake out like this every single time, but if you're busy throughout the week, you're a swing trader and you don't want to mess around with screeners, you'd like us to scout trades for you and even set them up, and also do updates for if we actually trade them, then give the swing report a shot. Links in the description below. It's like less than a cup of coffee a day, I think. Depends on where you get coffee, I guess. Probably anywhere that you get coffee these days. Links in the description below. It's a great way to also figure out like how to trade using this style. You get an update from me, you get an update from Dan, etc. That's pretty much it for NVDA. I wouldn't be surprised if we continue to see this a bunch of big old balance, and if we do happen to see some deeper retracement, I'm really looking up at over here where I would say that this midpoint is very likely for these buyers to look to defend it, at least initially, which is kind of what happened over here when they originally set these highs. Just because there's a good amount of retracement here that you'd probably get daily oversold conditions on a retest of this structure here. And, NVDA has not really spent a lot of time being daily oversold, at least in recent history. So here was the last time back in April, was when we had good confluence over there. And then before that, man, it's been such a long time. The last time before that was 2022. So I wouldn't be surprised with at least an initial bounce if we get daily oversold into this area to see if these buyers can affirm the breakout over this high over here, 115.10. Okay, so that's what that new trade zone was designed around, I think. Nope. This guy would not be surprised with the initial hold there. All right. Moving on to Bitcoin. So Bitcoin's just trading sideways here. It's not great. It's not ideal that the buyers are having a hard time finding acceptance over the January 2025 high. We have this new all-time high supply that's in the way. So basically right now, I would say the 2 key structures are this guy and this guy. Now, I know this guy hasn't been tested, so why is it key? Well, this is really just where the last leg up was, right? What this expansion into this balance, right? It came from here. So the breakout, this breakout, right, is being affirmed as long as we're holding over 97948.56. As of right now, this lower low under this low, not seeing follow through, this guy over here, not seeing follow through to come back down here was a good look, right? That was good defense from these buyers to not allow the sellers to kind of close this gap. It's not really a gap, but to close this gap to the next area of demand is definitely a good look here, but it's still just balancing trading sideways right now. Now the buyers are looking, in my opinion, they're looking just fine. I'm curious to see what this looks like from a pivot perspective. Again, there are very few years where Bitcoin hangs out over the pivot and doesn't at least make it to the R1, right? So let's see, over the pivot, made it to the R1, over the pivot, made it to the R1, under the pivot, made it to the S1, over the pivot, made it to the R3, all the way to the R3, over the pivot, made it to the R1, over the pivot, made it to the R1, under the pivot, made it to the S1, over the, you get it, right? There are very, very few years where that was the case. Curious to see what it looks like if we go even further back in time to BLX. Yeah, so again, it's just not too common for that to happen. So for me, that's, I think, is a pretty reasonable expectation for these buyers to eventually make their way back up to the R1. And are they doing that on this current move? It's really just going to be a matter of, again, 97948.56. All of this sideways balance is constructed for these buyers as long as there's no acceptance back under 97948.56. So, trade zone, you can update it. We've had this one of old. We had a sell in here that worked as well. So using the same exact ideas, something like this, I think is pretty reasonable. Trying to get back up to, if it were to retrace back into here and test these old structures, something along these lines, I think would be pretty conservative. Just like this was pretty conservative. We only got like one fill, but something like this, I think, pretty reasonable for Bitcoin. Moving on to Ethereum, I would not change anything with Ethereum. I think this is still a very reasonable trade zone. Again, this is just essentially a balance play, right? We're thinking, okay, Ethereum is back now in this big old chop over here. What made the lows for all this chop? It was this guy over here. We had a big old fall through back over this guy over here. So it would be reasonable then for these buyers to defend this structure and to defend where they popped out of here, to see if they can continue to stay within this guy. Because as long as you don't have acceptance under here, as long as you don't negate this breakout, technically this is fine for these buyers. This pop and drop here over this high, of course, a bit of a red flag. And so whenever you see a higher high that lacks follow through, what you should expect is a test of the other side. Whenever you see a lower low that doesn't see follow through, what you should expect is a test of the other side. It's not going to happen every time, but that is the goal of the sellers, right? It's no different than like a military conflict or a sports game, right? Like if one team doesn't score a basket, what's the other team going to do? They're going to run it back. Right? Do you know that they're going to get there? Maybe not. Maybe there's a turnover before the team that's now on offense can get back to the other side, but that's what they're trying to get done. And so how do you assess how well they're doing that? You just look at who's controlling the ball right now, right? And how close to the hole are they? So that's pretty much it. Yeah, so this is pretty much exactly what should happen, right? What quote unquote should happen. Higher high, no follow through, come test the lows. Lower low, no follow through, come test the highs. Higher high, no follow through, come test the lows. So if we're gonna pop and drop here, again, this is a very reasonable location for some buys. I know the risk is big, but the R is very reasonable. That's kind of just how crypto goes too, right? Like the risk is usually big for these swinger trade setups. And if you do hold over here and then make two new highs over this fella, these buyers should be trying to get to all the way to the other side of this big old balance over here. Moving on to URA. So URA, I wouldn't chase this. Like this uranium in general, that has a propensity to kind of have these false breakouts. So I wouldn't be surprised if we do happen to see some deep retracement, especially because we haven't really broken to any kind of new highs yet. There's still a lot of supply over here. So I know that the URA buyers have pressed on from here, but I still wouldn't chase this. Like if you're more of a momentum style short-term operator looking for a backtest price over this guy, that's fine, I guess. But I think it kind of pays to be a little bit more conservative with these uranium plays. Like for CCJ, we had something set up down here after this huge rip up, right? Like you would think after a big rip up like this that, maybe a higher low could be set, but no, this is one of those names where I think structure matters a lot more, playing off of these prior areas of supply and demand, order blocks, Darvis boxes, rectangles, balance areas, whatever you want to call it, two-way trade. There's a lot of assets that very often, they're more like they chop around a lot more. I think it's much easier to play off of structure for these kinds of assets rather than, like, for example, price action trends, where even on the weekly time frame, they can get quite messy here, right? So weekly higher low, higher high, higher low, higher high, no follow through, straight into a lower high, lower low, no follow through, into a higher low, higher high, no follow through. You get it. So anyway, that's my opinion for URA, and that's pretty much it. So moving on to trade review, I did my homework again. I got everything prepared, so hopefully this can go pretty smoothly. So for 610 RTY, there were just a couple of chop and stops, and the primary idea, I don't think I actually wrote down a primary idea for this one, at least I didn't do so for my notes, but I just really wanted to highlight how, like, a lot of the time this is kind of how trading is. Like, it's just especially if you trade like us, like how Daniel teaches it, right? Like you're doing a daytime frame operation, and then you're potentially looking to swing it. If the daytime frame operation happens to go well, then a lot of the times you're going to just kind of chop and stop. This review was going to be one about like how it's okay to kind of spin your wheels, but then I ended up getting a pretty decent trade at the end of the week, so saved it, but we'll get that when we get there. So for RTY on the 10th, I tried selling the pass back under the open, which was kind of an aggressive sell, and I was looking for a back test of 213.97. So that's on this day here, on Tuesday over here, right? So on this day, we've already expanded quite a bit, and I think what was the overall market doing on Tuesday? Okay, no, that was it. So I was just thinking, all right, well, it's like a little bit of a gap here. It was a baby gap. And I know we're just like messing with all the supply over here. The rut tends to be really choppy. So I was just thinking, all right, let me try an aggressive sell. Plus at this point, I still had not yet sold any of the daily, weekly oversold position buys that I scooped up on the back test of the 2022 high. I talked about this throughout this drawdown, throughout many streams as well, and TA Q&A huddle calls, which we just do in our community. If you're interested in joining a community of traders, links in the description below. I was just talking about how, I would look to back the truck up if we came to backtest these highs, because these are really when the big opportunity comes. When you backtest very large areas of balance, that's really where it's at. For example, here, right? This was just a back test of this guy, right? The COVID dump is this, right? It was really just a back test of all of this demand over here. And even over here, right? Even if you were to buy as soon as you were here, you'd have to take a little bit of heat. But that's only 6% drawdown before a lot more follow through. And so, yeah, even this guy, right, was really just a back test of this little area of demand. So, yeah, so I did end up well, whatever. We'll get to that when we get there. So at this point, I'm still like very long, and at this point, I was still looking for some aggressive sells to protect those long positions in RTOI if the market were to fall over and roll over, I should say, which it didn't that day. So let me bring up these references here. So it's 610. So all I did was I was just looking to sell the pass back down under the open. And again, I was looking for a back test of 213.97, which we did get, but it just didn't happen on my move. It didn't happen on the move that I got there. And you can see how the low of the day was pretty much at 213.97. So I had a decent thesis, right? The idea was reasonable, but it just didn't work out for me, which is fine. So it was stop over the high of day, and it was dirt cheap, right? So the way that I see it is, if the thesis is reasonable, if it's cheap, right? It doesn't cost you that much to put the trade on, and the R multiple is there, you can fire away at that, right? That's the way that I look at it, at least. I don't really care if the trade is going to work. I never know if it's going to work. In fact, I think it's better to assume that it's not going to work. From a psychological perspective, that, is a lot easier to accept, right? And that's kind of how it has to be anyway, right? Like if you run a business, you lay the costs out up front, right? You buy the property, or you sign a lease for the property, you pay for all the materials you need, you pay for the inventory, and then you hope that you can make enough sales to continue to cover all your monthly costs, and then eventually be in the black. So trading's no different, right? Like if you put the trade on and you think, oh gosh, I really hope this works, then you're kind of already starting from this point where there's the great potential that you'd be disappointed, right? Like if you put a trade on and you're hoping that it works, when it does work, you just think, oh, okay, great, that's like what I was hoping for. That's how things quote unquote should be. And then if it doesn't work, you're like, oh shoot, that's, I feel terrible. Now think about it if you come from the other side, right? Like if you think about it right from the get-go, okay, I've put this cost out, I don't expect it to work, this is the cost of doing business. Then if it does work, great, you feel very appreciative. And if it doesn't work, you'll feel fine. You're like, okay, I've already accepted that was the potential. It's kind of like what we often talk about regarding like coming into the market from a defensive position, thinking about capital preservation, instead of coming to the market thinking how many people think, okay, I want to get as much money as possible, right? This kind of psychological shift helps you operate in the markets in a more even keeled fashion, right? So, just some food for thought here. And that's why I'm okay with all of these things, right? These attempts, they don't really make you anything, but you don't really take damage. Sometimes you get paid a little bit. They kind of just, work each other out, like small wins, small losses. They kind of cancel each other out. And then your big wins are really what moves the account forward. And then you should never have a big loss, right? Because each trade should only have three outcomes, right? It should be a small loser, a small winner, or a big winner. It should never get to a big loser, right? And so again, that's kind of all those concepts put together, right? You just want to make sure that you're coming at these things from the right psychological perspective. But anyway, I digress. So the stop over the high today, and that was over here. So I just sold this rolled back on the open, and I chopped it up at the I took the risk out because I was originally looking for a deeper chop. So originally I was thinking, okay, well, this is the end of the day structure, and I just kind of eyeballed the point of control somewhere to be in the middle of it, and I was looking for an exit, I forget where. At 54.3, I just for like, I just know it was good R, and I think it was just like relatively somewhere in the middle of the of this guy over here, right? So I just wanted to get some good R. And I was thinking, you know, it's probably roughly the point of control of this structure. I was just eyeballing it, but this is such a clear EQ that the POC is probably somewhere in the middle. It's about right. Yeah, 54 point something. 54.3, so that's about right. So I was looking for that because I figure, okay, well, if we're going to drive down into yesterday's regular trading hours high, this is the structure sitting at the high. These sellers should try to get to this guy's point of control. So I was kind of eyeballing it, which, you know, not the best. I should have had it measured out first. But it was cheap to find out, so I just kind of made the decision on the fly here. And then I took the risk out early. It didn't get down there, and I took it out because I didn't like the response to this. I don't love the hold of 56.3. So I know that this guy over here is pretty much the next thing in the way, right? And if these sellers are going to break under the regular trading hours high over here, right? Well, then of course their next objective is going to be these highs over here, right? And so the fact that you just dropped and popped there, I didn't love that. So on this move back up, I just took the risk out of it. And I think it was actually a little bit of a small loss because I ended up taking some slippage on the stop, I think, and I didn't get a perfect fill over here. And I obviously didn't get a perfect exit off of 56.3. I don't know. I don't really recall. Like small losers like that, they don't really register to me. And then I was looking for, okay, I gotta move this over, I guess, for 213.97. And that was just a back test. We've already covered that, I think, right? 213.97 was just a back test of this break of the low of this guy. Because if we're gonna pop and drop from here, the first objective should be this low. So that was all that was. Let's just stop the rest. It was no big deal. And then sold RTY again. I did it again, and I was looking for a chop under the regular trading hours high. I missed it initially, and then I got it. So it was just the same dealio here. That's this pass back. No, it was this pass back over, and then I was looking for the regular trading hours high chop. Got it. And then I was being aggressive because technically these are aggressive sells. So I was being like, I was fighting for good R, but I was being really aggressive with the chops and taking the risk out because there's no overhead supply, and we're not moving. The value is not moving lower session to session. So that's honestly a very aggressive sell. Technically, from based off of how I how I perceive trend, it's going against trend from session to session and on the daily time frame. So it's the most aggressive style of trade. So I was just looking to kind of scalp and then take the risk out. So okay, so I get that one. I get the regular trading hours high chop, and then I was looking for more out at 55 and a half, which was just above the as a typo there, just above the high of the open 1 minute. It should be the low. I'm just looking for like essentially 55.5 is just one tick above this candle because I figure if we're gonna roll back down under here, it should be to the new low of the day. If we're gonna not find acceptance back over the open, these sellers should try to make a new low of the day, but who knows if they make it there? So I figured just look for an exit right above it. So I get that exit, and then I noticed that it missed just by a tick, which was not a good look initially. We get that initial miss there, and then it's only, I think, later in the session where you get the little lower low that gets to that 213.97 level. So here, I'll just show you on this day. Here. This day here, right? So 213.97 is over here. So I saw this, and as soon as I see this reaction, and then move back over this low, I assume that trade's not going to work anymore, right? Because it was so close to the goal and they fumbled it. So anyway, I just pointed that out as a piece of context, and then I stopped the rest. Notable failure, I just mentioned notable failure, so let's touch on the low of daily supply, but buyers also not advancing well and multiple passes over the open. So that was really it for that day, I think. That was it. And then for the next day on the ES, let's see, it was 611, I think. I marked up all my references already. For 611, I bought the pass back over the Depop, looking for a regular trading hours back test at 941, and so that's over here. So I see this move back down under the regular trading hours high. First of all, the daily context is this, right? The 11th is over here. Here, right? And so I'm thinking, all right, well, we have a little baby gap up over here. We're over, well, yeah, we're over yesterday's regular trading hours high for a little baby gap. These buyers should be trying to get to this point of control. So that's what I was looking to play to. Yeah, should be trying to get to the 1129, 1217 point of control, right? So at this point, I'm thinking, all right, let me try to play off of this move here that didn't get back down to the value area high. This was a notable failure on the seller's part to not be able to touch down on the value area high and then pop back over the depot. And so I just bought this pass back over. It was dirt cheap, like 2 points, if that, 2 points. Because I obviously I didn't get a perfect fill off the depot. It was like slightly above it. And yeah, so bought this, chopped it, stop under here, stop out, no problem. And then this was honestly the best setup on the session, and I just completely fumbled it. I was just talking about my friend's dog who got into an accident because they let their they let the son of the household's girlfriend watch the dog, and she had him off leash in Bushwick, which is whatever. Either way, he got hit by a truck, and so I was just upset about it. Talking to somebody, um, and that's a good lesson too. You know, like we've talked about this before, that you got to be focused, right, if you want to capture all of the opportunity. But no problem. So I stopped the rest, and then I just mentioned that the stair step off the value area high was dirt cheap, right? That's really a gift from the market to have a strong open, retrace to the value area high, and then give you a setup here that's like the ES is super liquid. So if you have to stop buy in, you can really get it one tick off. So that's like boom, 9.5, and like let's say you give it a little bit of a wiggle, it's like 5 points of risk, if that. Trying to get to the regular trading hours high that's better than 2R just to get to the regular trading hours high. To get to the open, you're probably looking at 3R better. So that's a bummer. And I just tried some more attempts playing off of the regular trading hours high. Here, so I bought at 10 o'clock, I bought the pass back over the regular trading hours high. That's over here. And again, it was dirt cheap, right? Because I'm trying to play with momentum. I'm trying to look for these cheap setups, and I want these aggressive chops. So I just bought this. I think I actually bottom fish off the lows here, and then chopped it up over here for like nothing, like a point, if that. For a point net profit, I mean, after the stop out. So I chopped it, and then I stopped the rest, and like I said, it was like worth nothing. Journal 11. Oh, okay. I tried again later. Yeah, I tried again later, right over here. So again, I'm looking to play to that daily point of control. And at this point, technically, we had already gone there. So I was a little bit more wary that they would try to get back up there. But still, like if you're going to reject initially here, but still hold over yesterday's regular trading hours high, and then if you were to make a new high, then they should try to press here to the value area high. So I was thinking it's still worth a shot if I can get it for cheap. And I did get it for cheap because buying the pass back over the regular trading hours high was dirt cheap again. So again, like what are we trying to get done here? You're trying to see if the session to session buyers, right, can continue to affirm the day plus buyers. How can they do that? They have to hold over yesterday's regular trading hours high. So that was, I think, a very reasonable setup. And I was being aggressive, so I had the chop for the stop for the first chop in the middle of this 1 minute candle, because if this momentum rolled over from there, I just didn't really want to be a part of it. And I was looking for the first exit here, and price was kind of stalling on its way up. You can see this overlap here. I just didn't really love that. But either way, it didn't get me, so I eventually do get this chop. I'm looking for the chop under the low of the local supply. This is what the heck? This is the low of the local supply over here. So it was really good art just to get there. I forget the fill, it wasn't perfect. Somewhere off the regular trading hour side, just to get there was better than 3R. So I was more than fine with firing away at that. Okay, and then I chop under the low of the 57.5 and then stop for the rest under the low of the move. And I was looking for another exit at the depot. And the reason why is because what I mentioned above, we had already gotten to the daily target that I wanted to originally be playing for when I was over here. I wanted to originally be playing for this test of the point of control. Again, if we zoom into that session, I was playing for it over here, right? Over here and over here. And then I stopped out here right before the move, which is kind of a bummer. And then I made that second attempt over here. I don't really have confidence that they're going to that they will get back there again. And if they're not going to get back there again, then it should be somewhere off of this supply that's sitting at the high of the day. And it absolutely was. So I just took another exit here under the depot and under this 60.25 level, 60.25, and then I stopped out the rest, and it was a decent trade, that one. And then finally, so pretty much a nothing burger day, then a small day, and so I was just thinking it's probably going to be a nothing burger kind of a day, week, but fortunately on Thursday I got a pretty nice one, Thursday into Friday, and what it was first, I'm noticing that there's very little corrective activity in the rut, right? Because it was a gap. So on, hold on, let me hide this and then wait, hide this guy and then leave this guy up. Okay, so on the run on this day, it was a gap down, right? And so it was on, let's see here. Wait, no, it wasn't a gap down. Yeah, it wasn't. Excuse me. So it was a gap down, big old gap down though. So very often on big gap downs, you don't really get a lot of action after the bell because a big gap down catches a lot of people off guard. A lot of people have to reposition here. And so as a result, you very often have a lot of two-way trade, which causes balance. So anyway, that being said, if you don't, the gap guidelines suggest that you go with gaps that don't fill right away, right? Because if they can't fill the gap, right, then of course that side is weak. If you gap down and buyers can't fill the gap, of course they're weak buyers, right? Because they can't negate the change of the gap down. If you gap up and then sellers can't negate that gap up, well then again, what does that tell you about sellers? That they're not very strong. So the key idea, I think this one is probably the best one for in terms of key ideas. The key idea is really location, right? Like when you are doing especially day time frame operations, I mean always, location is so important, right? Because all right, well, if you are trying to follow this gap guidelines and say, all right, I want to go with these sellers as long as they don't fill the gap, what does that mean? You know, that means that you have a lot of different places where this trade potentially could work. It could work right off of the open and it could work right off of the regular trading hours low, right? Because, well, the sellers don't negate this change unless they can get back over the regular trading hours low. So you kind of have to split up your risk capital, right? And or accept that you're going to take this one shot, and then if you're wrong, you're wrong. I don't like to do that. I like to keep my odds. I like to keep my options a little bit open, so I'll always split my risk capital up. And so I'm willing to play off of the open, right? And so the open was here. And what I did initially was, all right, well, I see this, and then I see this candle miss getting back to the open. So I think, okay, I'm just going to sell this new low, throw my stop over here, and then see if they can get all the way back down to the overnight low. That was the, where my, hang on a second here. That was the idea, right? So there's very little corrective activity in RTY. I recall that right away. And then I sold the move back down under, and I was sized to add. And I was looking to play to the confluence zone, but I kind of doubt that it gets there today. And the confluence zone was really what kind of gave me a lot of like conviction for the sell here, because if we're going to keep pressing lower session to session, I know we have this massive confluence zone here, right? With the high of this area, the high of all of this demand, the high of the local demand, and then the gap fill is all right here. So I was thinking if these sellers continue to press from here, they should try to get there. So that's kind of why I was interested in trying to go with the momentum of this gap down. And as always, it doesn't shake out as perfectly as I would like, but I was fortunate enough to capture it. So stop over the high of the day. I'm looking to play to that confluence zone, and let's see. Looking for a chop at the 6.6 value area high, and then look to add it back. So the 6.6 value area high. Oh yeah, I was looking to I meant the value area low. That's a typo here. So I was trying to get to here, right? Because remember, every single session is trying to affirm or negate prior session. So if we're going to affirm this session as supply, then what should these sellers be trying to get to? They should be trying to get to here next, right? And we're under all of these sessions right now, so the next objective should be the key references here. So if I'm going to be a seller here on this new 1 minute low, then they should be trying to get here if they're under the point of control. So that was my thinking. Obviously, it didn't shake out like that because it didn't get to the value area low at all that day. But it is what it is. I did get a flip here. So what I ended up doing was I see this move back here, and then I see, okay, we don't touch the open again. So I just sold the move back down under the value area high, the developing value area high, and chopped it up before the low of the day just to flip my cost basis down. And then I stopped out on this move up higher, I believe. Let's see. Flipped it. I was holding out for the ONL because it was not good R to get to the 6.6 val. And then I added on the pass back under the value. That should be Diva, so another typo. Covered the ad, just flipping the cost basis. And then I stopped the rest at 943. So that's this move over here. And then I tried it again at 945. And I was looking for the Deepak chop. So I just re-entered on this pass back down under the open. Chopped it up with the Deepak, stopped it out one more time, and then I think I did it one more time, chop RTY, and then I did it one more time, Uno Mas at 955. The R was not as good, but I was still looking for the Deepak here. The R was still okay, it just wasn't as good, and I think I had it over the candle on this pass back down under. I just broke that little stair step here, and I had it like that, I believe. Yeah, I had it like this. I wanted to see the momentum right get to the Deepak, and it did, but then eventually it stopped me out again, and at that point I was getting kind of frustrated. I want to go eat oatmeal, so I said I'm likely done for this session, and a week of spinning wheels, like it just wasn't really much of a week for wasn't a remarkable week at all. But then at 129, I was eyeing the RTY pass back under the diva. So 129, we're all the way over here now. And I'm thinking, oh, we're over here. And I'm just telling the gang that I'm scouting it, right? I want to see us roll back down under here. So I was thinking if we like don't make a new high and then roll back down under it, I would sell that and throw my stop over the high and trying to get to the depot. But at this point too, I also know I have a call at 3 p.m. So I'm like, if it doesn't set up perfectly for me, maybe I have to try to get something else done or maybe just pass on it completely. So I let him know I'm just eyeing it. I'm still just eyeing it. I'm thinking the odds of potential for the bounce are pretty good because like I said, usually big gaps, you just get a gap and hold kind of a day, which is kind of how this kind of session, we did have a gap and hold kind of a session. We just traded sideways after the gap down. So that's all happening here now in the afternoon, and I'm thinking, if we're not going to trade over the supply at the high of the day, then we're probably just going to keep balancing. This happens all the time. So I was just looking for a responsive trade essentially. Yeah, just looking for a responsive trade here, and I'm thinking potential of further balance, and we were battling the 6-9 session value area low right now. That's this guy over here, the value area low of this guy, right? So at this point now we're over here, right, in the afternoon. And I'm thinking, all right, well, if we roll back down under it, where should these sellers be trying to get to? They should probably try to get to the low of the day again, try to get to this point of control. Because, it's a battle for this guy, right, between this session and this session. So if we're going to roll down from the value area low from here, they should try to get to here next. Or technically, they should try to get to here first, right? This guy, right? The regular trading hours high of this session, right? Because, again, they're just battling these sessions out. So if not in here, then it should be to here. So that's my thinking. And what I do then is, still just eyeing it. I wrote that R out, assuming the stop over the local 15-minute high. Oops, that shouldn't be there. And then at 144, I said, you know what? I just top fish against the high that didn't see follow through, 43.8. That's this guy over here. This guy. So I'm thinking, all right, well, we just popped into over this guy twice. If we roll back down under it, it's super cheap to just sell the move back down under it, target this developing value area high, give my stop a little bit of wiggle room because it's been very choppy. So I don't expect us to, just get right there. And I was targeting where the value area high was. So something like this, right? Assuming you don't, it wasn't a perfect fit, it was something right under it. And assuming there, it was better than 2.2 R. So I was fine with that. It makes me sweat for a long time, like 30 minutes, but then finally it gives me that chop. Finally it gives me that chop, and it was 2R for, oh man, we made me wait for 40 minutes or so. And that was the last update because then I had the TA Q&A call in our group, so I can't do the coverage anymore in the room, and I just held it into the overnight session, the runner. So this was a nice 2R trade, and then in the overnight session, we did get to that confluence zone, right? So I ended up just closing it in the pre-market. I was away for the afternoon, the evening, and the overnight, so I didn't know that it got there. Otherwise, maybe we could have closed it actually further, because I'll show you what happened in the overnight session. It went way beyond there, right? The confluence zone is essentially at the open, right? Is at the open of Friday. The Friday's open was, let's see here. Friday's open was here. All right, Friday's open was here. And the overnight session got way past it, but I was just out. So I didn't see that. Is what it is. But that's still, great trade. So I was very pleased with that. That ended up being 32 32 points on, let's see, I had I only had two contracts on, but still pretty solid. I was very pleased with it. So anyway, again, the key idea then is really just location. And there were really two trades that kind of highlighted that, right? One was that ES buy off of the value area high, right? I should have been prepared for this because the regular trading hours high is not the only location that we should be playing off of, right? If we're looking for the session to session buyers to continue to affirm the daily breakout, then we have to play over here, we have to play over here, and we have to play over here, right? It's not until the prior session's point of control is violated that we can stop playing for that session to session setup to affirm the daily breakout. And then I missed it, right? This was great location, super cheap, good R. I missed it, right? So that was just, good lesson for waiting for location. And then for the rut, of course, again, it's a matter of location, right? Picking, okay, well, all right, well, if I'm going to be a seller here, I got to play off of the open, and I have to play off of the prior session's regular trading hours low. Again, we did not get up here, right? So I had to be a player over here, right? for looking for a pass back down under the open, and I had to also be looking for a setup over here, and there was actually a really clean setup here that I didn't get. I think, because I think I was just doing something here. Yeah, super clean, 1 minute stair step, very, very cheap. That was a really good location as well. Fortunately, I did get that, later day one, but this one would have been much easier. So anyway, that's the key idea for me, in my opinion, for these trades. It's just location, location, location. So that's it. If you made it this far, appreciate you tuning in. And if you wouldn't mind hitting us with a like and subscribe if you got something out of this video at all, we would appreciate that very much. Costs you nothing, helps us out a lot. Otherwise, I appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see you all next time. Farewell.